Hi.
Hi.
Are you our attendee today?
Am I what?
Are you our only attendee today?
Maybe, maybe not.
All right. We'll see who else chimes in. We'll go ahead and start the class. This is indeed being recorded. Let me prepare to share my screen with you. How has your week been?
I've had better weeks.
Oh. Did you get to do anything in regards to your budget?
I have been accepting bank transactions, but I sent you an email. I have some questions about that Beth was unable to help me with.
Okay.
So maybe you can help me with it.
Okay, sounds good. All right, we'll see. Oh, I'm sharing the wrong screen. All right. Perfect. I think that's everyone. Did I admit her? Girl, I thought I hit the wrong button. How are you doing, Ray Kate?
I'm good. How are you?
Doing well. We're just about to share the PowerPoint. You're right on time.
Perfect.
How has your week been?
Okay. Well, I am ready for my wins, losses, and whatever the question always is.
Oh gosh. I changed it around a little bit this week. So you guys can let me know whatever it is you want to share. All right. Let me make sure I'm sharing the right. I'm going to share the right window. Can't multitask today. Let's do it again. But you see this recording. I might have to edit this one because I've done this 3 times now.
Bless you. You're not there yet.
Hey, girl. Whew. Am I there? Can you see it?
You're there now. You got it.
Perfect. Welcome to the class, you guys. This is class number 8, Growth Through Budgeting. All right. So I changed around just a little bit. Whatever you guys would like to share, feel comfortable sharing it.
Okay. I got you. I told Jason last night he should be here shortly. He's trying to get off of a call. So when we went through our budget areas where we need to cut it's our primary thing right now, as we are paying too much money. Yet they're all for good things. So we're trying to figure out like cut or increase making money, right? So one area we saw was grooming. We spend a lot of grooming departments. You're like, okay, let's see if we can cut this. We have 4 children and we spend a lot of money on curly haircut and Taji's natural hair salon for protective styling. But for the first 7 years of my kids' life, I did their hair and let someone else do it. And it's been fantastic. And it has been very expensive, like $400 a month for my daughter and $100 a month for lock maintenance for my son. So it's like, okay, whatever. I know I can do this girl's hair because I did it for 7 years. I'm just going to redo it. So yesterday was hair day. We took out her box braids. We washed, we deep conditioned, we detangled, and we restyled. And it took me 10.5 hours. And I told Jay, this was not a good use of my time. I was not doing it again. Mimi and I have that's my daughter, our daughter. We have an excellent relationship. I'm the world's most wonderful cheerleader, but I am not very good at getting yelled at for 10.5 hours. And so I just said to him, look, I'll give some bone marrow. I'll start cleaning somebody's houses. I don't know, but this is not going to be an area of budget that I'm going to take back on just because I can do this does not mean that I should do this. And so Clarissa, she's got a girl. She's got to take back Mimi to go back every 8 weeks, do Mimi's hair. That's it's $400. It's worth it. I got to find another area of the budget to cut.
Oh my God, you got me crying over here. Forgive me. That's so funny.
Mm-hmm.
I can relate. Those hours are something else. So.
I'm not fast, but I mean, it's just girl's got a lot of hair, and while it's beautiful today, it's in some great 2-strand twists. She's killing it, but look, she was so mad at me this morning when she woke up. She was like, "Yesterday was mommy." I was like, "Nah, girl, it was not fun."
Oh my gosh. Okay. So that's maybe an area we can't cut, but do you have a secondary area that you're interested in and that you saw some possibilities?
The only other area I also cut was my house cleaner, which I also do not like cutting that area, but I cut her down from every other week to once a month. And so I honestly, what I'm coming back to is I think that this is it's not a money management problem as much as it is a money making problem. I need to increase my income. The areas that I can cut are too small. Like I can cut eating out, right? I can cut down on that, but that's not going to make that we need it to make. So I got to increase the making of it, which is good. I start grad school in 2 weeks. So in 2 years, my income, figure out the bridge, right? From now till 2 years when my income is not going to increase over. So that's, I think, every time I look at it, I'm like, yeah, this isn't going to keep working. We got to figure out a different way. But I don't think it's a cutting issue. I think we got to make more money issue.
I love it. And it's just temporary because once you graduate, you have a whole different profession.
And I actually will be making the amount of money we need to be making. Like it will work in 2 years. We just got to get to 2.
I love it. I love it. And that's the good thing about the budget is we are only doing it out for 6 months through the end of 2023, but that can be extended. If we can keep those same numbers and just get an idea where it's going to take you. And of course, add in those income streams, those different income streams. So that brings me so much joy.
Well, that's good. If you got any ideas for income streams over the next 2 years, you let me know.
I definitely will. I do for your husband as well. So we'll see what he thinks about that.
Awesome. I love it. I love it.
All right. Anyone else want to share? All right, Zade, that's cool. Let's keep it moving. The next item. Thank you, Mary Kate. So we want to recap. Of course, we always recap what we talked about in the prior week. So we talked about analyzing and tweaking your budget, as well as reviewing your budget versus actual template. How did that go with everyone? Mary Kate, I know a couple classes ago, you had mentioned how the formulas were backwards. So it would show a negative when it should show positive. Were you able to make those changes and see some of those numbers?
Yeah, Jason did. He was able to tweak that so that it was in the right area. So that was good.
Good. All right. Yes.
It just every time I look at it and I see them in the not being able to breathe. That's all. Sorry.
That's cool. We have to start somewhere and then we'll know where you're going and we'll make sure that we achieve that goal. All right. So today's lesson is running scenarios. So it's great that you brought that up, Mary Kate, because now that we have the budget in place, we've already done a bookkeeping, but not even talking about bookkeeping anymore. We have the budget in place. So now we want to run some scenarios to see what needs to be added or removed so that you get closer to your goals. And another thing we can do in these scenarios is extend the timeline. Again, this only goes through the end of the year. So as we recap, remember when you're looking at your budget, pay attention to if you're in the red or if you're in the black. If you're in the red, how do you get into the black? That's an important question. Mary Kate gave a great example of an area that's cannot be budged. It's now considered one of those necessary costs versus an optional cost. So keep that in mind. What goals need to be added and budgeted for? We did do a 6-month stint, which does not necessarily include everything that you come across over a 12-month period. So make sure you added in any of those items. And if there's any further adjustments, we can make those, like we talked about the time period. And are there any other steps that we must take to ensure that these numbers are ready to be used for your budgetary goals? That was last week. So I hope you guys went in and made changes and added the different items that you may have needed by adding a row to your budget template. We went over different ways to reach your goal. We have debt consolidation options, debt restructuring, increasing your income, minimizing your expenses, maximizing your income by leveraging your expenses, learning to say no to certain things, and making sure that we stick to the plan. I want to go into detail on the debt restructuring. I had a question after class in regard to what that one meant and how we can make that happen. And just from my experience, I know that credit unions and banks do offer options to consolidate your debt and possibly to restructure that. So you can talk to your bank or your credit union. There are third-party companies who do debt restructuring and debt consolidation. However, I cannot prefer or recommend either one of those companies due to their crazy rates and their fees that, if you go through a bank or a credit union, really the credit unions offer the best interest rate. You'll be able to see more of the money in your pocket instead of paying a third party when you could be keeping that money in your pocket. Their fees are just exorbitant. So I couldn't recommend any of those.
Do you get penalized for debt consolidation?
You may, but let me clarify. Good question. So when you consolidate your debt, like if it's all credit card debt, if they happen to go in and discharge some of that debt, you will receive a 1099-C, which would be income for that year on your tax return. So that's the penalty. It'll now go from, oh, you owe a liability to then you got income. So for that 1 year, your tax bracket may be increased depending on how much debt is discharged. That's the only penalty I can think of. They do not
Okay.
put it on your credit. They do not mark your credit because it's been discharged and now it's going to income. So it's not like it's going to be a ding there.
What do you mean discharged?
Okay, so if you have credit card debt that's like 15,000, and you decided, oh, I don't want to pay this credit card off anymore, and you go and you're able to get your debt restructured where they say, okay, maybe they work with the creditors, and this is a little extreme case. What I've seen is if you go 2 or 3 months without paying that bill, I don't know why my screen is changing. If you go 2 to 3 months without paying that bill, what will happen is they'll think that it's uncollectible and be willing to take less than the full amount. And so if they discharge part of it or the whole thing in some instances, that's the discharge. So instead of you owing them, you won't owe them 15 anymore. But what you will receive that year is going to be additional income of 15,000 that you have to report on your tax return and pay taxes on.
Thank you for explaining.
You're welcome. I hope I did a good job. Let me make sure we're done with this page before we go. All right, so these are different ways to make sure that you reach your goals. Did you have any questions about any of the other options that are on here? All right,
No.
let's. Sounds good. All right, so for today, we want to review your budget template. So if you can pull that out, we'll take a look at it. So go ahead and open that up. And then again, we can extend this budget over the next 12 months. And I look forward to running various scenarios to see how we can help you achieve your goal. All right, so that's going to be the remainder of the class. Since we have 2 participants today, we'll look into you guys' budget in detail. How's that sound? So, Sade, let me take a look at you first. Are you?
Are you sure you want to do that?
Oh my gosh. No, ma'am. Not if you're not comfortable with it. No, ma'am.
No.
Okay. Well, I guess I could just talk about it because that's what needs to happen next. So when we go back a couple slides when I was speaking about the recap. The first thing to do is to make sure that you're in the black. We want to make sure that you have all positive numbers. And if you do not have positive numbers, you have to get there. All right?
Mm-hmm.
Because realistically, the funds have to be there to cover the expense. And if it's not, something's going to have to give eventually. That's the great thing about numbers. So where are you at? Can I ask?
Yeah. I mean, the personal side is all done. I cannot finish the business side until I finish accepting those banking transactions, which I can't accept until I meet with you because I have questions about that. And so the personal side is not accurate because there's a line that says add back your own salary, or like I need to add my business income into the mix and it's not there. So the personal side is not accurate without my business income.
Okay. You brought up two great points. First of all, to add back your own salary, that will come into play if you're on payroll. If you pay yourself through your business through payroll and you have a salary, we want to make sure that's included back in income because we would subtract that out as an expense. If you do not pay yourself via payroll, that item would remain blank.
Okay, so it'll remain blank then.
Okay. And now in regards to the business income,
Yeah.
do you have an idea of what it is? Because let me remind you, the whole purpose of this is we're taking that 6 months of bookkeeping to see an average of what your income is. So when we go to the budget template, we're putting a hypothetical guess. It's like really educated because we're basing it off of 6 months. You have some data.
Mm-hmm.
And if you're looking at your numbers and you feel like that's a little low, are you able to know what needs to be added to it? Do you have an idea of what comes in every month?
Yeah.
Would you be comfortable putting that into your budget template so you can move forward?
I can look at my music staff. That shows me my growth. Yeah.
Just so you can bypass that, since there's a lot of bookkeeping that still needs to be done for the business side. That's just the one offer. I mean, we do want to go through the whole process. I'm just hoping we can move forward so you can start analyzing these numbers. I've been very antsy about analyzing these numbers for the past few weeks. I must apologize. I just want to make sure you guys get to the nut and bolts before the interest wanes, because I want you to see how tangible this is.
So you just want me to total up a 6 months gross or net income?
Gross.
I guess net is what I have.
If you're going through the My Music staff, it should be it should be gross.
Okay.
What would net be? Net fees?
Net would be minus payroll and minus some of the automatic or most of the automatic expenses that I have in here.
Are you talking QuickBooks now instead of My Music staff?
No, ma'am. Nope. This is my music staff. My music staff takes out payroll and some of the expenses that I add into my music staff. So I have a net and I have a gross.
Ooh, let's go with gross. But I would love to learn more about that. I thought My Music staff was just for invoicing.
No.
So you pay your payroll through there. Okay. All right. But yes, that gross number for the, I think we're doing December through May. And then get your 6 month total, put that in your budget, and then you can move forward with your actual June data and July data.
I also have an option for accrual versus cash flow, and I don't know what that
Cash.
means.
Use cash.
Okay.
Accrual means, well, cash would be easier to start with. Cash means when you receive the funds and when you pay the funds, when cash exchanges hands,
Mhm.
that's cash basis. Accrual would be once you send the invoice or once you receive the bill.
Oh, okay.
Yes. So you would count your income at the point of actually creating the invoice and count that expense at the point of receiving that Duke Power Energy bill.
Okay.
Yeah. So with that number in place, your income on your budget template, what else would you need before you can proceed?
I mean, I guess that's it.
All right. That would be great.
Okay, I'll have that in like 5 minutes.
Okay, good. Mary Kate, how are you feeling about yours?
So I think that the personal side, it has been our biggest priority because that feels like it's been the most out of whack. Plus our businesses don't bring in enough money to like drastically change our lifestyle, because I mean Jason's W-2 is what covers our lifestyle, and so it felt like our biggest priority was trying to get our personal stuff under like control of like understanding what was coming out of what budgets, making sure we shifted all of the business stuff in our personal accounts. And so I feel like that part was just the biggest mess. So I do feel like we have a handle on that, and we were able to open up the correct bank accounts for his new businesses and kind of get all that stuff out. So I'm going to be, I think the past 6 months, like we did all of the bookkeeping of that, but I think it's a bit because of all of the, like, we paid a lot for his current business out of our personal bank account, which we will not continue doing. So I think kind of very much what you're saying is like, we have really good data. It's an educated guess about what our budget is. We are seeing the spots where like, oh, that money's not coming into our personal account now. We can kind of ignore it or whatever. Like we have those places that the next 6 months worth of the budget versus actual, not even really that. I feel like mostly the next 2 months are like really, really telling. So this week we are finishing up July of our bookkeeping so that can be in there. June's already in there so that we could see, we have June up on our budget versus actual of our personal. And so we have that data, and then we'll finish up today July's budget versus actual. So we'll get a good look at like 2 months worth of it. We, definitely in June saw, I mean, we have felt, right? Like our money's not adding up correctly. We need to get it in the blood. It's not all there, which we've talked a lot about. Like we've had to rely on savings for the places where we are at month to month. And so that's not a safe spot to be in. And as parents of 4 kids, that's the part that makes both of us. So we tweaked some things for July. So I think we're both kind of antsy to see the July numbers, and then to see, okay, we've continued to tweak things. Like we're continuing some things like that we needed to stop paying for took like 30 days, before the next like pay cycle and stuff like that. So I think that really the next 2 months of this budget versus actual will be telling. I will say that it's excellent accountability of knowing that I'm going to have to put whatever I spend into my bookkeeping, that I'm like, I don't really want to put this into my bookkeeping. So that's good accountability, right? Where I'm like, no, I'm not going to spend this money. Or my dad, he always would give me money. He would call it mad money. And he would say, this is money you don't have to put in your bookkeeping, which made me laugh because I wasn't bookkeeping. But now I get it. He would just give me cash and he's like, this is yours. You don't have to tell anybody what you do with it. And that was get milkshakes from Cookout if you want to, and you don't have to put it into your, your eating out section.
Exactly. Look at Daddy. That's great.
Yeah, he did great with money, but he didn't teach me anything.
Oh gosh, I love it. I absolutely love it. That's a great. I like that. I may use that for my children, like because I'm trying to instill in them that monetary control. So that's great.
Yeah, I mean, and I definitely think it's like, here, you want to have money where you can just like go have fun with it, like go to the movies, go get yourself a pedicure that you would yourself that new lipstick that maybe you know, and so he always would have a little bit of that of like, this is my money that, and I don't know why he called it mad money. I guess if you're mad, you go spend it. I don't know. That's just what he always called it, was his mad money. And so he would give me mad money when I became an adult.
Oh God, nice concept. Nice concept. Well, good. And it's good to know that you guys are really using the budget and changing things and changing your current habits so that, things look better as it helps you get closer to your goal. Let me know, how can I support you, Jason?
I don't really know. I mean, this is really, really, I think, just helpful of continuing with the accountability and getting it all like squared away and looking at it. And then certainly the ideas are really helpful. So even like thinking through, we do have some credit card debt that we could ponder. I think we're trying to make some decisions about, like, we have a house that we could sell, but like long term, is that going to help us meet our goals? Like, so like just really trying to think through some of that stuff of like, do we sell this house to meet the short term goal, even though it's like actually going to hurt us in the long term goal of our kids' needs, who may not be able to live independently. And so we've always kept this other house as a place for them, as they are adults who might need assistive living options. And so I think we're like really like ruminating on those thoughts a whole lot and are trying to make some decisions. I think we have felt really stuck, and maybe even felt about this, and that's never a good spot to make decisions from. So the budget these numbers are giving us some pretty tangible, like, here's how bad it is versus here's, ways and some things. And also just that recognizing, like, just because something is a good decision, like where we're sending our children to school or Mimi going to get her hair done, doesn't mean that it doesn't. And so being able to name, like, this is still a good decision, and we have to figure out the cost, like how we're going to deal with the cost and logistically. So I don't know. I mean, unless like I certainly, we are here for learning, if you have any suggestions for how to do that, or I don't know.
Absolutely. One thing that came to mind is frequency, especially when it comes to the things that you're enjoying or that need to happen. Do they need to happen as frequently? Maybe the hair salon, is that a weekly commitment that needs to happen bi-weekly, 3 times a month? Where does that stand? So maybe
every other
month. Yeah.
Every other month.
Oh, good. That's
Yeah.
really good. And that's what we'll see on the budget.
Yeah. So yeah, that is, I think what maybe would be helpful is trying to figure out, like, it's $400 every other month.
Okay.
A month. So I think I'm really struggling with, if I budget it to be $200 a month, do I take $200 out of my checking account and move it? This is next month's money account or something, or do I not take $200 out and just say, next month I'm going to have to spend this $400, so then I'm not going to spend something else? Like that, I think, is what I'm really struggling with, because I feel like if it stays into my checking account, it's just going to get spent on something else. While I'm working really hard on this, I also want to be honest about my spending of, I don't even think it's like lack of self-control. I just think it's like an overwhelming life that I sometimes, it's just always like, oh, I'm saving, I need to keep $200 in it. Like, does that make sense?
Absolutely. Yes, it does. Absolutely. It resonates with me as well. So there are multiple accounting, budgeting systems that we use here at the firm. One is traditional accounting. where we just talk about income and expenses. But there's this other program I was introduced to. It's called Profit First, and it's for business owners. But let me tell you about it. Have I told you about Profit First before? Let me tell you now. So what this does is you take all the funds that come in, like for instance, your bank account, everything that comes in. And so what happens is, let me tell you the way Profit First is set up, and then I'll tell you how I think it applies to your personal situation with the checking, like we're talking. So with Profit First, everything that comes in for your business would all go into this one account, income account. Then twice a month, you would go into this income account and allocate the funds to 4 separate other existing accounts that have different purposes. So we have the income account that receives all of your income, and that's all it does. Then you have a tax account, operating account, profit account, and then the owner's pay account. So what happens is all that 100% that came in twice a month, you go in and you put this money in that bucket, and that's where it stays until you need it. I think that for you personally, if you had an account that receives funds of some sort, again, this is an accounting process that would need to be set in place for you and Jason, just to know what purposes each account stands for. And then you take it out. Maybe you have a account strictly for the children and whatever the children's needs are, school, grooming, whatever. But we can determine probably within the existing accounts you have, or maybe opening up some additional ones. But again, we need to set that structure. But to have your money come in, and then you allocate it and put it wherever it needs to go, and that's your line. So you'll have this card for this account or something of that nature to divide up or put that boundary in place. Do you think that would be feasible for you guys?
Yeah, so it's kind of like the option, if you will, of like every, you have an envelope for this, and this, and then when the money's gone, it's gone. But I don't use cash, so like, that does actually make sense. I'm wondering, if there's a way that I can do that. I think I need to figure out a way to move money. We operate within 3 different banks primarily, and I can move money between my accounts in the bank, but I don't know how to move money between. I think that's something I need to figure out, because if I could do that, then I probably already have the necessary accounts set up. I just need to be able to move the money between the accounts.
Hopefully your bank offers that.
Okay, so I should call the bank about that.
You should, yeah. It may be online. Sometimes it's called external transfer.
Oh, okay. I'll look it up. The credit union is where we do our primary banking.
They may not. Credit unions are a little smaller. Let me know.
Okay, I will. I'll reach out to it.
And that's just one option. We could think of something else. We just need to track it and see where it's going and tell it where to go. All right. Anything else you ladies would like to share? All right, let me go back to the PowerPoint. So we talked about this one. Zade, if we'll be able to look at yours, I think we have a few minutes left. You said now's a good time to go ahead and share?
Yeah, I put the amount in there.
Perfect. Let me go to it. This is School of Music. Is it in class 4 or 2? 4.
Well, I don't know. I just have it starred. I don't know how to find it.
It's okay.
It's not recent.
I'm gonna see if I can share a different window without me having to reach over the screen and figure that out. All right, so the goal here is to go in and add some different scenarios so we can see how the scenarios will come into play. That is what we're seeking. All right, you guys. So this is the budget planning.
The top number was like already there. I think that's from me making business transfers to my personal, and that's where we got that amount from, the 10,000.
Okay.
The 20,000 is from my music stuff. That's what I made from December to May.
Okay. That's what we'll use. Now see now why you thought it was not correct. It's freaking half of what you needed it to be.
Yeah.
Sounds good. So that's what's coming in. All right. The business expenses aren't there yet. And then we have your personal expenses. Okay. What are you seeing from these numbers?
Like
what is the story that you're seeing?
the negative amount?
Yeah.
That feels accurate.
Okay. Well, that's good to know. So what I'm seeing is we have income,
Mm-hmm.
and then we haven't even considered the business expenses, which we know you have those.
Mhm.
Your business flowing, but your living expenses already exceed the income that's coming in. So we would have to reduce this, and not only reduce it, but you have business expenses. So let's just assume your business expenses are 500. How much would you say your business expenses are?
Give me a second. Between like 750 and like 850.
Okay. That's 636. All right.
Per
So that
month.
got it. So on average, 800 a month for business expenses.
Mhm.
Then when you get to your personal, all right, that looks better. So business came in 20. After the business expenses, you're left with 15 that's coming home to you for your personal lifestyle. So when you get to your personal lifestyle, you're at 19. So you're almost 7,000 over budget. So something has to give. Now, when I'm looking at these, the transfers is not an expense. So that's skewing your numbers. So let me remove that. The transfers is just you going from one account to another. So we'll take that away. Investments in the business, that's you still putting money into your business. So take that away. It's good to have it on your bookkeeping, but it's not going to help us here. Now your numbers look better. Withdrawals.
Oh, that's really nice. I didn't realize you could do that. So you're just deleting those numbers from the budget sheet, but not from the bookkeeping, right?
Correct. Absolutely.
Oh, okay. I need to do that. So that was you took out transfers, investment into the business account. Is there anything else? I gotta write this down.
I'm looking at the withdrawals because if you're taking money, I think the withdrawals would need to stay because you're speaking of cash, right? Like you're
Yeah. Yeah, it's definitely me spending stuff. I might withdraw cash to pay her daycare teacher, or withdraw cash to like have tips at restaurants, things like that.
Yes. So the cash, how about give your mom some cash? But yes, okay. Refunds to be reclassified, that's not to be removed. But the transfer, do you guys know why I opted to remove the transfers?
Yeah, you're just moving from one account to another.
Exactly. You didn't actually spend anything. You still have the same amount of money that you had. So we don't want to include that as an expense.
Okay.
Because we've already noted on where we spent that in our like combined budget. So we just moved it, but then on one of the other pages we have where we spent it.
There
Right?
you go. And
Okay.
that's what we're going to grab. Exactly, Mary Kate. That's exactly it. And so here's another one, transfer to saving and paper. Zana, you're in budget.
Am I? It doesn't feel
Why
like
you
it. I have
saying-
like no money.
You you have a lot of transfers going on. So that has to be 0. And then transfer to PayPal, that would be owner contribution, owner distribution. I almost want to leave that one. So let me tell you what's in my head when I'm doing the transfers. Typically for what we do at our firm, regardless, is if it's from business account to business account, it's still business funds. So we don't and make that an income event or an expense event. Same thing on a personal side. If it's from personal to personal, it's just you moving your personal funds. But once you're transferring to PayPal and then maybe a business account, that may be you putting funds into your business as influence. It's still a contribution, but literally the cash is going from you personally to the business. It's not being used for an expense at that point. So it seems to me like it would be rational to not include that as a deduction in the budget. I had to talk myself through that because I wanted to make sure I'm telling you the right thing. It's not an expense at that point. Once you put the funds into the business and then you use it to purchase something, we're going to see that expense item show up on the business side. So I'm going to remove that as well. Is that okay?
Yeah, and also I think the lines got shifted because there's some numbers by line 82. I don't have
Property
the
tax?
yeah.
Girl, where'd that come from?
Girl, I don't know. I'm about to look at the bookkeeping thing and see what line 82 is supposed to be.
Okay. Now the transfers to friends, that is definitely going to stay. That's not staying in your possession.
Right.
Right? Eating out. That's a credit card.
I'm sorry, can I ask a clarifying question about these transfers? You just said, I think I just got a little bit jumbled. When you transfer from personal to business or business, no. Personal to business, I don't count that in my budgeting because I'm just reallocating those funds. Is that what you said?
Yes, ma'am.
Business to personal, like when I pay myself, I'm not on a salary because we're not bringing in that money. So I might pay myself but I'm just transferring it. Like I'm just transferring from business to personal. Do I do that in budgeting or just in the bookkeeping side?
It's going to be on the budget as an owner distribution for the business.
Okay. All right.
Do you see the owner distribution line under it's supposed to be business expenses? I guess it got removed.
Okay.
But business expenses, that's where we're going to have your owner distribution reflected. And that's going to be
from my business. That's from my business to my personal account, not the other way. That's not an investment into my business. I'm taking out of it to pay myself.
Exactly.
Okay.
That's where I'm at with that right now. It's clear if it's the same to the same. That's definitely not something we're going to use cash for. But with my current thought pattern, if it's going from personal business, it still wouldn't be an expense item because once you put those funds in your business, they're going to sit there and be used as an expense at that time. And we don't want to double count it. So I'm pretty sure that no matter which way it's going, as long as it's still in your possession, because I think Zade had a transfer to friends. At the point where it's transferred to outside of your realm of what you're taking care of, that's when that determines whether we keep it as something we're going to budget and say, oh, we're using cash for, or something that we're not using cash for at the moment.
Yes, I see. I think I'm actually understanding that because I'm getting rid of it. It's no longer mine to spend. I've already spent it versus when I'm transferring it, it's still mine to spend. It's just where I'm spending it from.
I love those words.
Okay.
That's what I said. Yeah.
I got it. Hey, we got there. We got there.
Those are great words. That's the perfect way to put it. Thank you. Yeah. All right. So Zade, now that we've made these changes, are you curious to see where you are now?
Oh my goodness. Yeah, let's see.
All right, let's see. So we took out a lot of things because they're just moving money around. Oh my God, look at this.
Yay!
This is
Oh,
great. So this is step
much
one.
better.
Yes. So you should have like 400 left monthly accumulating in your personal bank account.
Okay.
This is great
Apparently,
news.
I want to know that $427.36 that you're going to have left over. Where's that going to go? I have never, ever in my life had $427.36 left over after I've done my monthly budget. So should this day come, and I have $427.30 left over, what am I doing with this imaginary money? Where is it going? So I do not then just be like, oh, I've got money to put my kids in to another camp, or oh, look, I'm gonna go get my hair cut, or oh, what am I doing with this money?
I'm so glad you even said that. So that's the next thing. We want to make sure that, let's look at the second. Oh, you guys can't see it. That's what we want to make sure we're looking at. Are there other expenses that currently aren't being funded that you want to fund? Is that what you want to do? Are there other goals that we need to be adding in and budgeting for? Do you want them to go to another account? Is there something else you want to entertain? Where is it going to go? Other than that, it's going to go to savings, or it's going to go to something else to reduce some long-term debt. But at least you've got options. You have something to work with now. You're no longer wondering where's it going to come from to meet up with the current bills that I'm experiencing. This is the freedom that we're seeking for you guys to realize. So now that you have this $400 some, what are you going to do with it? What is it that you want to accomplish over the next year? Because just for 6 months, that's an additional, well, I didn't even add the other month. For 6 months, is that even adding up right? We'll work it out. But still, that's like $2,400 in serious numbers that's going to be sitting in your account looking at you like, are you going to put me in a CD, or what are you going to do with me? So that's great.
That's cool. That'd be really cool. You should go on vacation. Oh, I'm sorry. I probably shouldn't tell you how you should spend your money. You do with your money what you want to do with your money, but I'll be so proud of you. Okay.
Yes. So this is great. This is great theoretically. So that's the question now, Zade. Okay, so you have this. God forbid, if you were still in the red, then we would go up top and we'd say, okay, we have this one revenue stream income from your business. What else could we entertain to increase your revenue? Let me move this down. All right, so let's say that's that one. Maybe you could hire another person, and what revenues would be generated from them. Fine, your expense would increase, which we talked about that last week. How you would, what's it called? Maximizing your income by leveraging your expenses. So if you went in and hired someone else, how much additional revenue could you get from having an additional staff member on board?
Wait. So I'm in the red on my month to month.
Okay.
So you're saying that even though I'm in the red, it still could be a good idea for me to hire someone, even though I'm not sure how I'd pay them, to then like be, say, a social media manager, because I know without a doubt that they could drive traffic, and I will never be my own social media manager because I hate social media. And yet I know that it would be a good idea for my business. But I've always assumed I needed to be in the green with savings before I could hire this other person out.
Understood. This could actually bring you in the green, because when you bring on a person, a revenue generating source, the goal is for them to at least bring in their salary times 2.5. That's just a standard. So if I hire someone for the firm, it may cost $30,000 a year for their salary, but I'm banking on them earning the firm $90,000. And so that's something that I look at every year to see if we're meeting up with those metrics.
Okay.
Yes.
That is different thinking than where I was going. So that's okay.
Good. So of course you would indeed have to take into account the additional expense. Let's say this new hire was a 1099. So now maybe she has an additional, I don't know, 700 a month is, to pay this person, but the revenue from the new hire, I don't know if it's full-time, part-time, but let's say full-time new hire person would generate, I don't know. And see, that's another thing. I was about to just throw this number in here, but this is where we make it realistic. So I'm going through the 6-month period, right? But what if we extended it and say, okay, I'm not going to hire anyone as of today in August, but I should make that new hire by October. Then you would put that income and expense in for October on the extended budget, and then have a fuller and more realistic picture of what's going to happen. Okay. Zade, can I do that for yours?
Mm-hmm.
All right. Let me hurry up because now I feel like we're going to run out of time. All right. This is the original one. And it has all my changes. So what I want to do is we're going to extend this. Let's go to the left. Enter some more columns to the left. Oops. Right. All right. Is that gonna let me copy it? All right. So that'll go through 11 and one more. That'll be 12. All right. So we're just gonna say theoretically. So we already had the budget for 6 months, right?
Mm-hmm.
So we're going to extend it. That's the thing about it. It just takes a little formatting, but we can work it out. Some of all these. All right. Ugh. Why'd you do that? E through Q. Oh, it's mad at me. I know what it is. Well, I have to format and paste it. Copy. Paste special values only. Now I can do it. Is that what we had? All right. So now that's the total income that's projected based off of the 6 months of what we know for sure. That's why that's so important. And then that needs to be updated as well. It probably is. Sorry about the color. So this person that we brought in. All right. And then Mary Kate, I'm 100% sure Jason would understand this. Okay. So he can help you with this if you guys want to watch this lesson afterwards. So the contractor pay, and realistically, let me go up to the top. The income for this person, contractor income from entrepreneurs fund, the full-time hire. Let's say Zade brings on someone here. And like I said, it should be 700 times 2.5%. So we should have additional revenue generated of $1,750 from a new hire. And yes, it's going to cost $700 for that person. So we have $1,750 in additional income. And be the sum of those three numbers. So that's an additional income stream of $5,000. What did y'all do to the formula? Oh God. I'm so glad this is a copy sheet.
Me too.
All right, so 5,000 additional income, and for that, for the same month, we're going to come down and put 700 somewhere because that's what we're going to pay them. even if it's a social media person. Line 40. So we're going to come to line 40 and put 700 for expense. And it's no longer a 6-month total. We have extended the budget past 6 months based off that 6-month data. But you guys get the picture. I would need to add these columns up, and it's going to give me some trouble. But when you get to the bottom, we have now 700 in expense added to everything else. Let me go back over here since I done messed up the whole thing. But when you get to the bottom, we're going to see that additional, what was it, 1750 minus 700, which is 1,050 in additional income, even though you added an expense and you added a revenue stream.
Yeah, that's real good.
Yeah,
That's after you've paid them.
Yes, after you pay them, your
That's
income
pretty
has. I'm sorry.
I said that's fantastic.
Yes, it is. Yes, it is. So those are the different scenarios we can entertain. So, okay, let's say you hire someone and you hire a social media person, or maybe because this income from your business is based off of whatever's happening now, whether you're working full time or maybe you're working 75% of the time. Maybe there's room to grow in your schedule if you want to commit yourself to filling your additional time with work for your business. That's still a true option if you want to do it. So you would need to add that in and be like, okay, my additional work hours, additional time for me, if any is available. And then you would add in your additional revenue making potential. Maybe you could work an additional 10 hours at whatever your rate is. And maybe that's not something you want to start right away. Maybe you can only do it for 2 months, but whatever that is, that's what the budget would do for you. I'm gonna go back to the one that I just added with all these colors. But that's what we could do. So up here we have 2 different streams now, and now maybe in November you want to do some Christmas work, or you start in November and like, oh, I can do an extra 15 hours and I charge $125 an hour for my service. So it's not continuing, but that'll give you something. And then since it's yourself, you don't have an expense to correlate with that increase in income, unless your babysitting expense is going to increase.
So I'm putting this not on the budget versus actual, on the budget planning. This is where this is going.
Absolutely.
All right. Okay. I think I'm following. I think I'm following you, and I like it because I do have some good ideas about what's coming in the next 6 months, but I don't think I had I think that I need to get Jason to add some more columns to our budget planning, because our budget planning ends in June. So I will get him to add in some more columns so that we can plan out through December, because we do actually have a good idea in our brains of what's going to happen from now till December, but not on our sheet. So I'll get him to do that.
Fabulous. Fabulous. Okay. And then when you have this sheet with all the new expenses, the new incomes, all the new things added, that's when you want to switch it over to the budget versus actual. And of course, for those new things, there may be no activity because you didn't have them in the past 6 months, but you will.
Okay. And just continue to make sure that all of the lines are the same.
Absolutely. Yes, okay, ma'am.
All right. Thank you.
All right. You're welcome. Any final questions? Oh, sorry. All right, you guys, thank you so much for your time. And I'm unavailable this Thursday. Unfortunately, I won't be here, but I look forward to seeing you at next Tuesday's class.
Thank you so much. See you.
Thank you as well. Bye.